Good morning and welcome to today's pre-market video. Now in today's pre-market video we're going to take a look at the news which is going to affect the market generally, and then we're also going to take a look at the Fin-Nifty, since it has this expiry today, at what option traders should do with the index. Now coming to the news front. Now the news front is basically very similar to what I discussed in my video on Sunday. This week the headlines are more important than data. A lot of PMIs are releasing across the world, but they will not be able to counter the headline news. Why I say that? Is basically everyone this week, whether you're trading the Indian market, you're trading the British market, you're trading any market across the world, everyone will only be watching one thing, which is the Jackson Hole meeting. This is as the Federal Reserve chair will not be saying whether he's doing a rate cut or not. This says he will be doing a rate cut this time, but he will signal to us whether it's a 25 basis points rate cut or a 50 basis points rate cut. That is going to affect the Indian market for stocks and for the indexes, as whether we like it or not. That is what controls even what roughly the RBI is going to do over here. So since we have touched the topic, the three things you should look out for in the Jackson Hole meeting across this week. Number one, whether the Federal Reserve Chair, how he discusses their mandate towards the 2% inflation target. If he's very positive about it, then this is the first signal that we're going for 50 basis points, which will rally the markets. If he's not positive about it, then it's going for 25 basis points cut, which I believe is already factored into most of the markets. Second thing is whether he discusses a tighter monetary policy, whether it's needed anymore. If he says it's not needed anymore, then we're going to have a bigger rate cut of 50 BPS. But the key one is the third point, is this time I believe the Federal Reserve Chair will go and talk about the Rayner principle, which was last used in 2018 if you check the world markets. What is the Rayner principle? Is basically if the committee is uncertain about a monetary policy, any committee across the world, then the policy makers in the committee don't have to take a decision based on facts such as inflation and all this. They will just take the action that they believe has the most probable outcome, which is beneficial to the economy as a whole. So I expect this to be used this time, and if he does mention it, then it is going to be the key headline everyone who's a professional trader will be watching. As if he's cautious in the Rayner principle, then that's 25 BPS cut. If he's not cautious, then it's a 50 BPS cut. So what does this all mean? Now, overall, in all the 3 points, if the Fed chair is less dovish, then that will mean stocks across the world are going to fall and the dollar is going to rally. If he's more dovish, then the dollar is going to fall and stocks are going to rise. So whether we're trading the Indian market or you're trading any market right now, you will want him to be more dovish, because the dollar will fall, which will help, let's say for India, the Rupee, and it will also cause a up move in stocks across the world, which will help all of us, and it will also help the index have an up move. So that, I believe, is what everyone's going to be watching this week, rather than watching the data points. This is the PMIs and everything are not going to be that important. So that is what everyone should be looking forward to. Now coming to the Fin-Nifty. Now the Fin-Nifty has its expiry today, and if we drop on the levels, now we will see the Fin-Nifty has been trading in a box range for quite some time. Before we go into what is going to happen in the Fin-Nifty, I think we have to cover why this is happening. Now, if we look at it, in the past, we had a one high volume bearish bar, and we see it had formed a box range in that bearish bar's body. Now the same issue has happened here again today. Here in this current scenario, again, we had a high volume bearish bar here, and then another high volume bearish bar here. Now if we look, all the moves post that have been within the body of these two high volume bearish bars. Hence, until the Fin-Nifty is able to clear this high volume bearish bar, basically the resistance at 23,200 or the support at 22,600, we're going to continue getting this noise. But if we clear it on the upside, then we will be out of the woods and we'll start an upward journey. However, if we clear it on the downside, then we'll commence a very big fall because of it will be a continuation of what had started. So the whole game is going to be decided by these two high volume bearish bars, and anyone who's using my stuff, my indicators, will know how they work. Now another thing what everyone should be watching out for is the trend catcher indicator. This is, if we look at it, why we have not moved up. If we see, the trend catcher indicator has tried to come up above the zero mark here, which is basically this point. Yes, it had formed very good candles, but if you look, why did it fail? Because the trend catcher could not come back above zero. Now it has again reached the zero mark, and it is slightly protruding above it. So anyone who is using this indicator, if it takes the previous high of the indicator, then is when we will most likely break above 23,200 and go up. If we do not break the high of this, then we are not going to basically break 23,200, and we are going to again go here and get rejected. So the whole game is now going to be decided by, number one, these two high volume bearish bars plus the trend catcher indicator, as it is signaling what is going to be occurring. Now what should option sellers do? Now, like yesterday, like Sunday's video, I will only discuss what option sellers should do rather than what option buyers should do. This is, option buyers within this zone will get butchered, whether they like it or not. Plus, if they decide to trade today's, the options expiring today, they will have a rougher time. This is until we clear these two zones. They're not, options are just, buyers are just going to get hit by decay whether they like it or not. This is within this range, it's an option seller's market. So, as an option seller, what will I do? Now, I believe, unlike yesterday where I said we sell put, I'll be selling puts in the morning and calls in the afternoon, and that worked out very well. Here I will prefer to enter calls and put sells at the same time. Now on the call sell front, I would say more riskier option sellers can sell above 23,200, but there's a high likelihood that those calls will spend most of the day under pressure, or basically borderline going into small profit, small loss, until the latter part of the day, where they will end up, the decay will kick in at a higher pace and send any failed attempt into the calls into further decay. So if you're a more risky option seller, 23,200 and above can be sold. If you're a less risky option seller, 23,320 and 23,380, that's the zone you sell above. Now on the put side, I believe 22,740 is for the more riskier option sellers, while 22,600 and below is for the less riskier option sellers. So I personally will be selling first 22,200 and above calls and 22,740 and below puts. So, but you'll have to leave a margin of, I would say, for the MTM to fluctuate, because of the range boundness. It will test both the call sells and the option and the put sells for some time before going and decaying into profit. This is, I believe, even any up move which comes, even if it goes to 23,320 resistance, it will still end up jaggering about so much here towards the end of the day that 23,200 and above should decay to zero. On the other hand, any move towards this, if it falls to 22,600, then 22,740 and below, so basically you're going to sell 22,700 put and below. The same should happen here, and that should help them decay. So I'll be taking the more riskier option, and the traders who are less risk averse should take the less risk averse option in terms of option selling. I believe option buying is going to be riskier right now, as option buying has come to more scalping. Anyone who traded, let's say, the market yesterday knows that it was more of scalp trades. You're not getting a clean move to literally stretch out your legs and get the good amount of points. You're having to get a bit here, a bit here, a bit here, a bit there. So that's why I'm covering only an option selling strategy rather than an option buying strategy. So that's it for today's video. If you liked it, then hit the subscribe button and the notification bell and like the video. And any comments you may have or any suggestions, you can drop in the comment section below or WhatsApp it to the number shared in the description box. Thank you.